Sort of sell-off. Ajay Bodke from Prabhudas Lilladher now joins us. Ajay, what do you make of the market, the fall that we've seen from the highs? Do you think we have made a near-term top?
I think after 8 sessions of nearly 2,000 points of up move on the Sensex, we will primarily buy $1.5 billion of FI inflows. I think one is starting to see some sort of tiredness creeping into the markets. And I think the markets in the very short term, in my opinion, should move sideways, should consolidate before, I think, scaling new highs as we approach the budget. If you look at the pure valuation terms, I think with an expected EPS of 515 rupees, exactly a year from now, that is Jan 2016, at around 9,000 levels or 8,900 levels to be precise, we are trading today at 19.9 times 1 year forward earnings, and I'm penciling in a growth of around 10.1% in the earnings growth between now and Jan 16, on a back of a top line growth of around 6.5%. So you're already looking at a 13% premium over the last 10 years average. Last 10 year Nifty has traded at roughly 15.2 times 1 year forward earnings. So I think, and let's not forget that although the bulls would argue that this is a bottom of the earnings EPS, and many sectors like construction, capital goods, oil and gas, metals, companies from those sectors are not contributing meaningfully to the EPS numbers. And as the cycle turns, as the investment revival happens 6 months from now, these companies will start contributing to the EPS Nifty earnings, and hence the PE will not look as daunting. Be that as it may, I think today it does appear that there is a case for the Nifty consolidating. I am not advocating that it will see a sharp downslide, but at least it needs to consolidate at the current levels. And then I think maybe after budget, having dissected the budget numbers, and then I think if the RBI were to further loosen, I think there is a case for the markets to move up. But the global cues, Pankaj, continue to remain very positive, because we've seen the EU just last week announcing €1 trillion worth of quantitative easing. We already, and I don't expect the US Fed decision that's expected today. I think it will continue to be make the same noises as it did last month. And I don't think markets are expecting a tightening or the rate rise to start in US anytime before September of the next calendar of 2015. So I think that given, and the fact that oil will continue to remain benign, both for geopolitical as well as for economic reasons, because of massive demand destruction in Japan, China and Europe, as well as geopolitically it suits the West to ensure that the regimes in Russia, Iran and Venezuela continue to remain under pressure. I don't think India, which is the biggest beneficiary of the fall in crude and other commodity prices, as well as the fact that we are looking at one of the few economies where inflation is trending down, hence interest rates are expected to go down. So we are in that sweet spot, both due to global and domestic reasons. So there is a case for a medium-term strong bull run, which we are already in the middle of it. Right. And I am extremely bullish from a medium-term perspective, and I will not be surprised if the markets were to double in the next 3 to 4 years. However, at the current moment, as I said, we need to be slightly cautious.
Right, but Ajay, what do you make of earnings? You mentioned that earnings growth have not started in, but when are you factoring in a good earnings growth to come? Double from these levels in the next 4-5 years. We'll need a good solid earnings growth also coming in for the next 4-5 years. How do you see that shaping up?
Yeah. I think Pankaj, I think if I were to do a crystal ball gazing and look at how the earnings are expected to pan out, then the expectation is that this year, that is FY15, we will be having a revenue growth of around 6.5% and an earnings growth of around 10.1%, and Nifty earnings of around 447 rupees. As we go forward in FY16, the earnings growth the revenue growth will pick up in our estimate from 6.5 to 9.2%.
Ajay, just a minute, we'll come back. Ajay, we'll come back to you. Ranbaxy has declared its numbers. We'll just get the details coming in. But if we essentially look at the initial reaction, about 2% decline. What I can pick up from some of the wires is that they've done a consolidated loss of about 1,100 odd crores. The estimates was that it will be close to about profit of about 200 odd crores. I don't think that that would be a clean number that we are looking at. So with that respect, probably there should be some sort of one-off that is there into those items, but the initial reaction on the negative side, and now you can see slight bit of positive that is also started to come in. About 1.8 odd % decline as far as Ranbaxy is concerned, 1100 odd crores in terms of losses. That is the consolidated losses that we're talking about. Expectation was about close to about 200-300 crores in terms of profit and not any particular loss. Ranbaxy is down 2. If you could just pull up Sun Pharma, remember they should move in one ratio, but that whether that ratio is standing in or not. 690 as we speak for Ranbaxy. Sun Pharma also just slipping in. As you can see, that red dot among that entire red chart is that at the last 4-5 minutes you've seen some amount of sharp sell-off to come into the markets. Both Ranbaxy as well as Sun Pharma on the lower side. Detailed numbers of Sun Pharma are yet to come in. About 1100 odd crores as far as the losses are concerned. This is just the initial take that we have. We don't know whether there is any exceptional item in these numbers. So Ajay, if we talk about some of the names like Titan, they particularly did not give very great set of numbers. Ranbaxy, at least on the face of it, the numbers are not looking that great, but the reaction is just about 3 odd % decline. Do you believe that companies where people have been rewarded, investors have been rewarded, even 3 or 4 quarters of muted earnings, will lead to still the valuations being sustained?
I think Pankaj, going back to the previous question, we are penciling in roughly around 18 to 19% CAGR in earnings over FY16 and FY17, and CAGR in revenues of around 9 to 9.5% in the Nifty companies. Now, coming to your question on some of the companies where they have been disappointing the analysts on a trot for 3 to 4 quarters, and yet the valuations are lofty. I think the markets would sort of start getting worried if they continue with this disappointing trend, and that distinction between companies which are outperforming the expectations and not outperforming the expectations clearly will start being visible in the market sooner rather than later.
Right. Ajay, I have some more details coming in on Ranbaxy. It's clearly the sales numbers that have disappointed. 2,587 crores. These are the consolidated sales numbers for Ranbaxy. 3,200 is what we were estimating. If we look at the profit from operations, it's just about 16 odd crores. That's really a number. Okay, there is a forex loss of about 132 crores, so you can probably add that back. Also the other expenses, other expenses are normal. It's not particularly that high overall. It's looking in, there are some change of inventory, which has also led to about 161 crores in terms of gains. So yes, there are some exceptional items, but overall, the sales definitely is a muted one. 600 crore was what the street was estimating. On the back of the hand calculation that I can do, about close to about 400 crores adjusting for everything would be the EBITDA. So it's slightly on the lower side. As you can see the loss on your screen, it's about 1030 odd crores. Financing cost 147 odd crores. These are all consolidated numbers. There is still a 15 crore loss that I can see on the exceptional items. So overall, it's very, very premature to look at these numbers. There are 3 exceptional items that I can see within this entire one P&L, and probably it'll take some sort of time. As you can see, the tax expenses, this is clearly something which is alarming. So the loss before extraordinary activity is 135 crores, and the tax expenses is 881 crores, and that is the clear number that has led. So we were talking about 3 exceptional items, and now it's the 4th exceptional item that essentially we can find on the screen. We would wait and watch from the management. Remember, now the management is of Sun Pharma, and we would hear from them that what essentially went wrong in these numbers. However, in the notes to account, they have said that tax expenses for the quarter and 9 months ended December 14 includes about 309 and 284 crore tax respectively pertaining to prior periods. So there are some prior periods adjustment that they have, 284 as well as 309 crores. If you add back that, it's about 500 odd crores and still 300 odd crores, but they're on a PBT level, it's a loss number. Just again would like to pull up the reaction of Ranbaxy because it's very confusing set of numbers. Tax expenses 884 crores, as I can say from the notes to account expense B, that 309 has been prior period adjustments and 284 crores as well. 2% decline. It had that initial fall. On the first take, these numbers are just confusing, and these numbers are definitely lower than one of the most optimistic numbers. But we did a preview throughout the day of Ranbaxy. That gave you a sense that the expectations are on the very, very varied side. So it was right from 300 crores EBITDA to about 650, 700 odd crores in terms of range. On the it's a very back of the hand calculation, adjusting in for the forex losses, adjusting in for some sort of changes in inventory of finished goods. Close to 350, 400 crores. That could be the number on that EBITDA front, but I've not got a chance to look at it. As we speak, the counter is reacting. Initial reaction coming in very, very knee-jerk. Now you're getting a sense that it's largely on the flattish side. 2% decline. Sun Pharma 1% down, 900 rupees for Sun Pharma. 2 days back-to-back. One day, yesterday it was the Nexium impact, and today you can see with the Ranbaxy numbers, the counter is looking on the weaker side. We'll try and get an analyst on Ranbaxy, but the initial reaction is that these numbers are confusing and there could be a downward bias on these numbers. Right. So Ajay, I read the entire details about Ranbaxy. What is the sense that you got about these numbers? Tax rate being so high, there are 3-4 exceptional items. You think that investors will take time before they come out and take any sort of call on these numbers?
I think, yes, you're right. The fact that there are so many exceptionals, one needs time to dig into the details and analyze them, I think, before jumping to any conclusion. So I would refrain from commenting on these numbers till such time that I've had an occasion to look at all these exceptional items in detail, understanding the rationale, and then commenting.
Right. Not commenting about Ranbaxy particularly, but whenever we have such companies where the predictability comes in a doubt, don't you think that it should not trade at a multiple like Sun Pharma, even though it's merged with Sun Pharma, at least till the time it's trading separately? Because you get higher valuations for higher predictability, and with such sort of exceptional items coming in very regularly, don't you think that that is something which can lead to a derating of these names where there are volatile numbers, but valuations are still very high?
As I said, I would refrain from commenting on Ranbaxy in particular, but in general, if you were to ask me a question, whether volatility in earnings can lead to a derating of a particular stock, then the answer is yes, because predictability in earnings is what sort of market looks forward to. For instance, I think the reason why HDFC Bank, for instance, or HDFC enjoys a massive premium over the peers is in addition to the fact that they have the best corporate governance practices and best NIMs as well as best ROAs, the predictability of earnings. Quarter after quarter for multiple quarters, the companies have delivered between 20 and 30% return in bottom line. And I think that is the reason that gives comfort to a large number of institutional investors who are long-term holders to build strong positions in these companies and make them part of their core portfolios.
Right. Ajay, do you cover Titan?
Yes, we do cover Titan.
Did you have a chance to look at the numbers? The numbers did not deserve a 7% move. Do you think that after the numbers it's playing up a catch-up role? Because when we were talking to Amnish some time back, he was telling us that there are very few consumer stocks that are not trading very, very expensively, and Titan, he mentioned, was one of them that has not performed in the last 6 months. So do you think it's just a catch-up rather than a result reaction?
I think I would tend to agree with him. He's our resident domain expert on FMCG and retail, and I think his view I would endorse. In fact, in FMCG space, the companies that we are advocating investors to look at in the medium-term basis continue to remain Britannia and Colgate-Palmolive. If you look at Colgate results, Pankaj, I think the results have been very good. They have gained market share both in toothpaste and toothbrush market. They have had a significant improvement in the gross margins. The prices of their raw materials on a YOY basis are down, and they have a very good product launch. They had last year and they is on the anvil. So Colgate Palmolive in the medium term, and also Britannia, nearly 60% of its raw materials are contributed by palm oil, wheat, and some other agri products, whose prices on a YOY basis are down significantly. Plus, I think they continue to launch new higher value biscuits, which will aid in terms of improvement in their operating margins going forward. So both Britannia and Colgate Palmolive should be considered as part of core portfolios in the FMCG side by investors.
Right, Ajay, I remember that you had recommended Britannia when it was about 600, 700 odd levels, or slightly higher than that. At this price, can some fresh new investors also come into Britannia?
Yes, I think that's why I put in a caveat that I am not advocating a 15-day, 1 month kind of a call. It is a medium-term call for investors who are looking between 12 months and 15 months or beyond kind of a horizon. They should sort of start looking at companies like Britannia and Colgate Palmolive.
Right, Ajay. Thank you so much for joining us here this afternoon. Always a pleasure
Thank you.
Talking to you. That was Ajay.